All right. Good evening, class, and let's begin our lecture for today. Our lecture for today will be continuing from where we stopped the last time. And the last time we started, let me share my screen. The last time we were doing taxation of business income, capital allowance, and we did not finish the capital allowance. So we're going to look at capital allowance, then loss relief. Let's see what we can take from the other side of capital allowance. We solved the other day, we solved this example 2.1, and we then enter to example 2.2, where I was trying to tell you that there is what they call carry back of capital allowance, and also there is something they call restriction of capital allowance. Sorry, the network seemed to be throwing you off and on. Sorry, sometimes network happens that way. Okay, so we'll look at exercise 2.2 because that's where we left off. Energy Resources Limited is a company engaged in the incorporation and sale of new electric cookers. The company ceased business on 31st July 2008 due to stiff competition from importers of fairly used cookers. The recent results of the company revealed the following. Now look at the recent results for like 8 years. From 2000 to 2007, it's like 8 years. Okay? Now look at also the final year when the business ended. Okay? Now, we were told to compute the company's income tax liabilities for 2001 to 2008 assessment years, giving all relief as much as possible. What do they mean by relief? Anything that will be used to reduce your tax is a relief. Okay, let's look at this question closely. If you see here, year ended September 30th, this is the basis period. This is the basis period. Year of assessment is year of assessment. So most times, if you see capital allowances, if they have given you capital allowance figures, it is always given in year of assessment. Assessable profits can either be given to you basis period, year ended. So if they give you in year of assessment, then there's no adjustment to be made. That is what you use. But if they give you year ended, then there will be a need for you to know which year of assessment is corresponding to the year ended. Now, they told us to do for 2001 to 2008 year of assessment. So for year of assessment 2001, if we must follow the rules, it is on preceding year basis. That means preceding year basis will mean we will have our accounts ending on 2000. So that means year ended September 30th, 2000 relates to year of assessment 2001. So you will be seeing me when I write year of assessment 2001, the basis period will end September 30, 2000, and I will pick this figure. So don't be surprised when I'm doing 2001, you are seeing me picking figure for 2000. I do 2002, see me picking figure from 2001. Don't be surprised. This is year of assessment and it must be based on preceding year basis. Okay, now let's go. Let's look at the solution, page 10. Solution is on page 10. All right. Now, can you see that the year of assessment is 2001. The basis period is from October 1, 1999 to September 30, 2000. So anything that is year ending September 30, 2000 is what I am going to use. And so my assessable profit is that one that is year ended September 30, 2000, which is 1,800,000. And that's it here, 1,800,000. Fine. Our capital allowance is the next thing you do after assessable profit. So after assessable profit, you talk about capital allowance. What is your capital allowance for year of assessment 2001? You go to capital allowance 2001. It is this 1,950,000. So you have your 1,950,000. But now, the law says that when you are doing capital allowance, you have to check if the company or into agricultural business. If they are into manufacturing or agricultural business, then you do not prorate your capital allowance. What do I mean? You use your you relieve your capital allowance as much as the profits can carry, which means that if you have 1,950,000, it's either you relieve all of them or you relieve as much as this can carry. How do you do it? You'll be checking this capital allowance you brought here. The smaller figure is what should be put into here. Now, that is if the company is agricultural business or a manufacturing company. Any other one like trading company, you prorate. And when we say prorate, we are doing 2/3 of your profits. So the highest that you can relieve is 2/3 of your profits. So what you'll be doing now, instead of checking 1,950 with 1,800,000, you'll be checking 1,950,000 with 2/3 of this figure. Whichever is smaller is what should be put here. So what is 2/3? 800 is 1,200,000. So 1,200,000 is smaller than 1,950,000. So you put it in two places. You put it here and here. Now, what is the essence of putting it in two places? Now, let's deal with the first one. This is your capital allowance you have calculated for that year. This is what you are supposed to claim as capital allowance. This is what you are supposed to use to reduce your profits. But you cannot reduce all of this because it is bigger than what your profits can reduce. This law says that your profits, your capital allowance can be reduced by 1,200,000. That is what your profits can carry. So you are going to remove 1,200,000 of your capital allowance. So when you do that, it means you'll be left with 750,000 capital allowance, which you will take to next year. This is the unrelieved capital allowance that will be carried to next year. Now, this same 1,200,000 is this same 1,200,000. Now, if this is your profit, accessible profit, this is the capital allowance allowed by law to reduce your profits. When it reduces your profits, your taxable profit will now become 600. It is from this 600 that you will charge tax. So if you look at it now, company income tax, 30% of 600 will give you 180,000. So you see, 30% of this taxable profit is what is your income tax. Then coming to education tax, you always charge education tax whenever you are doing company income tax. So you will do 2% of whatever you get as your accessible income. 2% of that will give you 36,000. So this is the tax you are to compute for 2001. Now let's go to 2002 and see how we fare. In the tax year 2002, basis period is still preceding year basis, October 1, 2000 down to September 30th, 2001. Where will we get our profit figure is in the year ending 2001. So we are having 2,300,000. And that is what we got here, 2,300,000. Now, our capital allowance, see this 750 that was from last year, we are bringing it to this year. So this is like the opening stock of capital allowance, which is the capital allowance brought forward. Then the one that was claimed for the year is where we get 2002 rather, 920. So this 920 is this one here. So opening balance plus what we have for the year, giving us 1,670,000. So this is what we are supposed to claim. You ask yourself, if I compare this figure with 2/3 of this figure, which one is smaller? So when we check 2/3 of 2,300,000, we are having a smaller figure of 1,533,333, which is smaller than 1,670,000. So you put it here so that you know that since you're not relieving all of them, this is the balance you are taking to next year. And now you are bringing it here again to be relieved from your profit. So if it is your accessible profit, this is the capital allowance that you are supposed to relieve. That means this is your taxable profit that should be accessed to tax. Now your tax will be calculated, 30% of these profits will give you 230,000. Your education tax will be 2% of your accessible profit, which gives you 46,000. I believe that is clear. We go to 2003. In the year 2003, our basis period is October 1, 2001 to September 30, 2002. Beautiful. Our accessible profit will be on year ended September 30th, 2002. Year ended September 30th, 2000. $3,500,000. So we have our 3,500,000 here. 3,500,000. That's your accessible profit. Then our capital allowance. This is what we carry this is what we carry forward, is what we are bringing this year. You see, we add it to it from last year and this year's own, we add it here. Now that we've added it, this is the figure we have. Now this is our profit. We are going to be comparing 2/3 of this figure with this figure here to see which is smaller. So let's do it. 2/3 of 3,500,000. Where's our calculator again? 2 divided by 3 multiplied by 3,500,000. You see, I'm getting 2,333,333. 2,333,333. Of course, it's higher than 1,046,000. So find out that this is the smaller figure. So you take the smaller figure and you put it down here, and you put it the same way here. That means if this was our capital allowance claimable, we can claim everything. That means nothing is being carried forward next year. And that is what we brought here, reducing our profit. It means that our taxable profit is this figure. Our taxable profit is this figure. This is what we'll be using to claim our tax. 30% of this figure will give us 604, and that's our tax, company income tax. Our tertiary education tax will be 2% of 3,500,000. That's 70,000. That's fine. We've done 2003. Let's go to 2004 and see what we can do. In the year 2004, assessable profit is based on assessments from basis period of October 1, 2002 to September 30th, 2003. September 30th, 2003, we have 1,500,000 as our profit. 1,500,000. Now the capital allowance, there is no one brought forward from last year, so we're going to check 2004 capital allowance for the year. 2004 capital allowance is 870. So take it, 870. Of course, when we compare 870 with 2/3 of 1/5, we find out that 870 is smaller than 2/3 of 1/5. What is 2/3 of 1/5? 2 divided by 3 times 1,500,000 gives me 1 million. So 1 million is higher than 870. So we put the 870 that is the smaller. So we can relieve everything. So we take the whole of capital allowance here, take the whole of capital allowance here. That means nothing is carried forward to the next year. When we reduce the capital allowance from profit, we have 630 as our taxable profit. We look for 30% of it, we have 189,000. Then our education tax will be based on 2% of this. Now that's for 2004. For 2005, our assessable profit, you know how we got our figure, is based on the year ended 30th September 2024. We know we got our capital allowance is based on year of assessment 2005. Now, when we compare this 850 to 2/3 of 17, we find out that 850 is smaller. 2/3, 2 divided by 3. So always you will be doing your 2/3. You'll be doing your 2/3. So we find out that it's smaller than 850. So this figure we got 1,000,000,1333 is bigger than 850. So we take our 850 as a smaller figure. So we less it here, nothing is being carried next year. Less it here again, 850 is our taxable profit. So 850 is taxable profit, then we find 30% of it, that will give you your tax. Tertiary education tax will be 2% of this. We're done with 2,000 similar things. We got our assessable profit the normal way, we got our capital allowance in the normal way, then we look for the 2/3 of it. Find out that 2/3 is still bigger than this. That means we can put the smaller one, 730. 730 goes here. Means nothing is left. Okay. Now when you less, you have 470 as a taxable profit. You know how to get your company income tax and your education tax. Now the exciting part here is your penultimate year. This is the part that gets me excited. Penultimate year and your ultimate year. These are the exciting parts. Now, penultimate year, we have preceding year basis. It will be October 1, 25 to September 30th, 26. So when you look at it, September 30th, 26 is 950. So that's what you are using, 950. You want to compare this 950 with actual year, penultimate actual year. Actual year would be January 1, 2007 to 31st December 2007, actual year. So we ask yourself, where can we get 2007 January? 2007 January can be gotten here because this account ends in 30th September 27. That means from January 1 to September 30th, how many months? Is 9 months. That means we need 9 months figure from here. So if you look at it, it is 9/12 times 780. So that figure here is 780. We need 9/12 of it. After taking 9 months out of it, we need how many months to make it 12 months? We need 3 months. So we need 3 months from here. So our October, November, December can be found here. So we need 3/10. So that's it here. 3/10 times 250. So when you tidy up this one, let's do it together. Nine divided by 12 times, what's the figure? Times 780. Times 780. 780. Now the next one is 3/10 times 250. 3 divided by 10 times 250 gives you 75,000. When you add 75,000 to, okay, if you add this 75,000 to 5 them together, you're having 660,000. And so that's how we got our 660,000. You ask yourself, if you are representing the tax authority and you have 950 and you have 660, which one will you charge tax? You charge tax based on the higher one because you want higher tax revenue collection for the government. So you choose the higher one, which is PYB 950. Now that you choose the 950 as your assessable profit, let's look at the capital allowance for the year 2007. For the year 2007, capital allowance is also 950. That's the end figure here, 950. So this is your 950. Of course, 950 cannot be smaller than 2/3 of 950. So you need to look for 2/3 of 950. 2/3 of 950 will give you 633,333. So 633,333 will be 2/3 of this, which is smaller than 950. That's what you put here, and you also put here. Coincidence. This is a coincidence. 950 minus this will give you this figure. Yet again, 950 minus this will give you the same figure. So your capital allowance carried forward and your taxable profit for the year is the same thing. So what you do now is you look for 30% of your taxable profit. That will be your company income tax, 95,000. You look for 2% of assessable profit, choosing, which is 19,000. That means you are going to carry this capital allowance to next year. The next year, which is 2008, is the ultimate year. Ultimate year. So it has to be actual year basis. From the date the business, from January 1, 2008 to the date the business ceased. And which date the business ceased? The business ceased on 31st July 2008. And you can also see 10 months ended 31st July 2008. So from January 1 to July is 7 months. And this is a 10 months figure. So we are going to take 7 months out of the 10. So it becomes 7 over 10 times 250, which gives us 175. That is your basic, that is your assessable profit for the ultimate year, 175. Now, your capital allowance. Now, this is your last year of business. Your capital allowance carried forward is this. But if you look at capital allowance figures, there were no other capital allowance in 2018. But we were told that balancing allowance, which is another form of capital allowance, that only occur after you dispose of an asset. What is balancing allowance? Balancing allowance is you have a tax written down value of maybe say 1 million. That tax written down value of 1 million represents future claim of capital allowances you're supposed to claim in future years. But now you now sold it for 900,000. That means you have only claimed 900,000 from your 1 million. 100,000 seem to be lost. But the government is saying that 100,000 which you did not make from sale can be claimed as a balancing allowance because you sold your asset less than your tax written down value. The opposite is capital and balancing charge. So you have 1 million, you now sell it for 1,200,000. The extra 200 is like a profit to you. The tax people will charge you because you've made profit on it. They're going to charge you along with your normal operations. So now this is balancing allowance. It means they would have sold these things far lesser than what they have in their tax written down value. And this is the loss they would have made. So the company is going to claim it as balancing allowance, as I said here. So this balancing allowance is like a capital allowance. So 2,350,000 is what you are going to add to this figure, 316,667. That will give you 2,666,667. This is the capital allowance you are supposed to claim. But in the last year of business, you don't go about doing 2/3 because your business is ending. You want to claim your capital allowance to the full. So all you need to do is to just check here with this figure. whichever is smaller is what you should put. So you see the profit is smaller. So you put this profit figure that is smaller, you put it down here again. You see, because the profit is smaller, your profit, taxable profit is now 0, while your capital allowance that is supposed to be carried forward is this. So if your taxable profit is 0, your company income tax will be 0. But your tertiary education tax will be based on 170. 175,000. Sorry. Now, in the last year of business, the law says that if you made a loss, that loss is lapsed. You cannot carry it forward. It ends there. But if you have a capital allowance that is supposed to be carried forward, since the business has ended already, you can't carry forward. You have to not carry backward. Now you are carrying backward. We have passed penultimate year. We've passed them. So, but we are going to carry it backward and go and treat them again. So when we are carrying them backward, it means we are going back to penultimate year. We are going back to the year before penultimate. How many years backward are we carrying it? 5 years backward, beginning from the penultimate year. Now let me show you how you are going to carry it backward. So I'll go to page 12 here and show you how to carry it backward. We go to page 12 and carry it backward. Okay, capital allowance is carried backward for 5 years of assessment. Now we have gone to penultimate year. Okay, now when we get to penultimate year, let me bring it down here. Can you see the penultimate year? Now, what is important is that we have charged capital allowance before. And when we charge capital allowance, look at our taxable profit we had, which is this. That is what you are going to bring again. Taxable profit. Normally, it's from here that you pay tax. So you're going to bring it back and you're going to collect your tax. This 95,000 you paid as tax, the government is going to refund you. So what will you do? You are going to say, since they have given you back your tax, bring your capital allowance, which you are supposed to carry backward. You have carried it backward. Now, this capital allowance is bigger than your profit. What you'll be looking at now is this figure and this figure. Which one of them is smaller? The smaller one is going to be inside here. So is the profit smaller? Yes, profit is smaller than capital allowance. It means profit is not big enough to clear all your capital allowance. So you bring your profits down here, you bring your profit down here. It means this is as much capital allowance you can carry. It will remain 2,175,000. Now your profit less this figure, it means your profit is now 0. But profit is 0, that means your tax is supposed to be 0. So the 95,000 you paid before, they are going to refund you so that you don't pay tax. 95,000 previously paid will be refunded so that you don't pay tax. Then rather you claim capital allowance. Then you go to the second year, which is the year before the penultimate. And I told you taxable profit is 470. How do we get it? You go back to the year before the penultimate. Taxable profit is 470. That is what you're going to bring. This, and I look at it. Is my profit big enough to be relieved, to relieve the capital allowance? You look at it, profit is smaller. So you relieve as much as your profit can carry. You cannot do more than your profit because it's from your profit that you are relieving capital allowance. So you take away the smaller figure, profit is now zero. Tax is zero. It means the 141,000, which is this figure here, 141,000, which you paid as tax, will be refunded to you. Tax is zero. This is what will be carried backward. So when you carry backward, you see you have brought it backward here again. Your taxable profit was 850. Let's see. That's it. Taxable profit 850. You bring your taxable profit down here, 850. You check, is 850, is it enough to clear your capital allowance? No. If it cannot clear your capital allowance, clear as much as the profit can carry. 850 here, 850 here. That means here is zero, here will become 855. That will be carried backward. That means the 255,000 you've paid as tax will be refunded to you. Then you go back again and you bring your taxable profit for the year 2004 at 630. So let's see it here. That's it here, 630,000. So when you bring it 630, you bring your 855. Wow, profit is still small to clear the capital allowance. So you relieve as much as you can carry. You relieve as much as you can carry. This is now zero. It remains 255. Now, be mindful. It is 5 years you are carrying it backward. So from what year to what year have you been carrying backward? Let's see. We started carrying this thing from 2007. So 2007 is the first year backward. 2006 is the second year backward. 2005 is the third year backward. 2004 is the fourth year backward. So now we are going to the last year backward, which is 2003. 2003 is the final year to carry backward. Now you bring your taxable profit. Let's look at our taxable profit in 2003. Taxable profit before we paid our tax was this figure. So we bring it down here. This was the figure. How many capital allowance are we carrying backward? 225. Wow! Profit is enough to relieve your capital allowance. So you put the smaller figure. This means that you have relieved all your capital allowance. So here is zero. You successfully relieve it 5 years backward. But if you cannot relieve it 5 years backward, instead of writing capital allowance carried backward, which is zero, you will write capital allowance lost or forfeited or lapsed. Capital allowance forfeited would have been any figure here, and that ends it. But now it is zero. Then that means that when you relieve it from here, this will now become your new taxable profits. Remember, when you were doing 2003, this was a taxable profit and you paid the income tax of 604, but they will refund you some money because your tax is supposed to be 536,500. So they're going to refund you the difference between 604 and 535,600. So they are going to refund you this. This means that instead of tax of 604 as previously charged and paid in this year of assessment, 536,500 will be the correct charge for this year. So when we do it, it means that this amount, 65,500, it's a mistake, forgive me, will be refunded, where you will be paying 536,500 as your tax. So if you look at it properly, in the year of assessment, 2001, you pay the tax of 180. So if you look at it here, 2001, you pay the tax of 180. 2002, you pay the tax of 230. You pay the tax of 230 in 2002. In 2003, as we just calculated, we are paying the tax of 536,500 instead of 604. Then the other years, you are paying 00 tax. So you get it now. You are going to pay zero tax. So all the tax you paid from year 2, 3, 4, they are going to refund you all of them plus this. So in other words, they are refunding you taxes that you have paid for that period so that you can use whatever things you have to clear your capital allowance. So the government says instead of you paying tax when you have unrealized capital allowance, let's help you. Your business is collapsing. You are declaring bankrupt. Let's give you back your tax. Government is so generous. Let's give you back your tax so that you just claim your capital allowance and close your business simply and easily. Now, please study a similar example in skills level past question paper. This kind of thing is same. This same kind of scenario is there. It's a question number 1 type of question. So if you can understand that and this, then you are ready to do capital allowance. So I've taught you capital allowance carried backward. I've also taught you that your capital allowance restriction is 2/3 of your accessible profit. It is only restricted to people or businesses that are not manufacturing, businesses that are not agriculture. If you are dealing with agriculture or manufacturing, we don't restrict it. Take as much as your profit can carry. And that's it. Okay, let's go to the next topic, which is taxation of business income. Taxation of business income part 3, loss relief. Loss relief. When we say loss relief, it means that businesses make loss sometimes. So we have been dealing with profit. Sometimes business makes loss. How do we deal with losses? The law says that profit should be carried forward for a business. So if you make a profit and you cannot relieve it in that year, take it forward and relieve it from the same type of business. That is what is called carry forward loss. But for individuals, we have what they call current year loss, which you can relieve from different branches of business. Let's say you are a sole proprietor, a sole trader. You have a loss on your business, trading business. You also made profit from your rental business. You also made income from your salary. The law says that the loss from your business can be relieved in that same year, maybe from your rental profit, so that it will absorb the shock. That is what we call current year loss relief. But if the loss is too much that you cannot relieve it from all your businesses, maybe you make too much loss that all your profits are not enough to relieve all the losses, the remainder that will be carried forward, which is called the carryover loss, will only be relieved from that type of business. So so it means that if you cannot relieve your business income, your business loss from all other type of business, and you take it to the next year, it's only your business profits that will relieve the remaining loss. That will mean that if you make a loss again in your business and you are making profit from others, the one you are carrying forward cannot be relieved with the other ones, except only the ones that is the current year that will be relieved from the others. Now that's one thing. Let's leave individuals, because in the exam you will be tested on company. Company do not have current year loss. A company does not have current year loss. What a company has is carry over losses. Now, what do carry over losses do? It means that when you make a loss this year, you take it to next year. Take it to next year. If there's any profit big enough to carry it, to relieve it, fine. But if you don't have any profit, you keep carrying them until whenever you have profit. But there is a problem. Because I taught you commencement rule and cessation rule and change of accounting date, sometimes there is abnormality. Because of this overlap in assessing as in commencement rule, and perhaps because of gaps and overlap in cessation period and change of accounting date, you find out that sometimes you may be treating profits twice. For example, your year one, the profit you made in your year one is treated twice because you treat it in year one, you come to year two and still use that same figure or part of that figure. But when it comes to losses, the law says they should be conservative. They can't be treating it twice. They should be fair. Okay, you're back. Now, the law says that in the event of a loss, you don't treat it the way you treat profit. What you do is this: you cannot relieve your loss much more than the actual loss. So that's what they call loss restriction. You cannot relieve loss more than what was actually lost. But in profit, you can be taxed more than what you made as profit. Now, we are going to look at a question. But one thing about treatment of losses in commencement and cessation rule, sometimes as told the commencement rule, losses will be, basis period will be overlapping, and so losses will be appearing in several basis periods. That's where the actual loss comes in. But when it gets to cessation rule, normally, like we did capital allowance when we start carrying backward for 5 years, for loss, we don't carry backward. Once you hit the cessation period and you made a loss, that loss is gone forever. The loss is gone forever. There is no law that says carry backward of loss. You don't carry backward of loss, you only carry backward of capital allowance. Now let's look at this simple example to show you what we are going to do in losses. Dominion Enterprises commenced business on July 1, 2004. The following are the results submitted to the revenue. Now look at the profit. Look at the capital allowances. Now I told you before that capital allowances relate to year of assessment. Student is off again. Waiting for the students. Okay, student has rejoined the class. Okay, so now I was explaining that when they give you profit and loss here and capital allowances, just know that capital allowances relate to year of assessment. And so if they commence business in 2004, it means the capital allowance here is for the first year, that the period ends in December 2004. So this year of assessment 2004 capital allowance This is 2005 capital allowance. This is 2006. This is 2007. And this is 2008. That's it. Now, look at for profit, they give you year ended, period ended. So you have to now adjust it to suit year of assessment. Basis period for year of assessment. You have to adjust it to suit basis period. Okay, so now what do we do? Required, compute the total income or loss of the business that is accessible, that is accessible profit or accessible loss for all the relevant years of assessment. And you are told to ignore the right of election. So we don't do right of election. So what do we do? Let's go to page 15. We go straight to page 15. Let's see page 16. Okay. Now look at the solution here. Year of assessment 2004. The business commenced July 1. So it has to be from July 1, 24 to December 31st, 24. So that's what we did here. The accessible loss we are giving, because that's the period, we are giving your loss is 180. So you bring it down here. This is your loss, 180. What is your capital allowance? Your capital allowance is 30,000. So you carry the 30,000 here. There is no way you can relieve capital allowance from loss. It's only from profit. So you are carrying this capital allowance next year. So that means your total profit is nil. Since you made a loss, you made a zero profit. That means if you made an accessible loss, the taxable profit is nil. That is what you'll be filing for, nil taxable profit. So they cannot charge you tax. Your profits cannot be negative. Taxable profit cannot be negative. So it's either you use the word nil or you put zero, or it must be between 0 and a positive number. That is why we use profit, so that it will be charged to tax. Your accessible profits, you could have accessible loss, but there is nothing like taxable loss. We don't tax loss. It's always taxable profit, and it can be nil, which is 0, or positive. Whenever you use the word nil, it's either because your accessible profit is nil, or you have an accessible loss. Now that's it. Then you go to the next year, 2005. The next year, 2005, what do you do? Your basis period is still preceding year based. Okay, no. Since it is commencement of business, you start from the date the business started, you count 12 months. So the date the business started is still from here, and you count 12 months. From July 1 to December 31st is 6 months. So this figure here represents 6 months figure of loss. The remainder 6 months, which is from January to June 2005, you take 6 months figure from 120. So that's what we did here. 6 months figure from 120, which is going to be 60,000. So if you look at it now, 60,000 from here plus 180 here will give me 240. So you see, our loss, accessible loss for the year is 240. Now, we are going to bring the loss from last year brought forward, which is what we call carryover loss. Carryover loss brought forward 180. So we brought it to 180 plus 240. If you add them together, it is 420. But we'll ask yourself, have we made actual loss up to 420? No. This is because this is the figure we used. And this is half of this figure we've used. So we have not made loss up to 420. So the actual loss we have carried so far is 180 plus 60. That is it. 180 plus 60 is the actual loss we've carried so far up to this moment. Add them together, the actual loss is 240. So that means we're not going to carry 420 because it's bogus. It's 240 that will be carried because that is the actual loss we've made. That is it. Now, what is your capital allowance for the year? Capital allowance for the year is this 40 here. That's this. Then bring the one that you are supposed to relieve last year, which you didn't relieve. You carry it forward to this period. That's 30 plus 40. Add them up together. You have 70,000 unrelieved capital allowance. There is no way you can relieve it from a loss. So this 70,000, you take it to next year. Your profit, your taxable profit is nil because you have a loss here. So your taxable profit is nil. Okay, let's get to the third year. Now, the third year, the basis period, we say that the basis period should be in line with the end date of the company's account, and it must be on preceding year basis. So this is 2006. The company brings its book in December 31st every year. So you have to choose December 31st, 2005 will become preceding year basis. That will mean that it must have started from January 1, 2005. Simple. January 1, 25 to December 31st, 25. That will be the basis period for year of assessment 2006. What is your assessable loss for the year? So you ask, where can I get 2005, January 1, 2005? January 1, 2005 would only be here. So this is year ended. So this must have started January 1, 2000 and what we are looking for. So it is this 120 that is our assessable loss. So you look at it, 120 is your assessable loss. Loss, accessible loss brought forward is this 240 that we carried forward last year is what we are bringing forward here, which is 240. Add them together, you're having 360. But ask yourself, have we made, since we've been carrying these losses, have we carried up to, the actual loss we've been carrying, that we've been incurring, is it up to 360? Let's see. We carry this 180, and now we are carrying this 120. If you add the two of them, it's not up to 360. So if you look at it, 180, this 240 we brought here had this 180 included. It had 60 included. That's what made it 240. Where did this 60 came from? It came from half of 120. And now we are bringing the whole 120 again. So you see, this 360 is 60 more than the actual loss. So if you add these two, it's 300. So 300 is the actual loss that we are supposed to carry forward to next year. So that's it. 300 is the actual loss instead of 360. That is what we call loss restricted to actual loss. 360 is calculated loss, but that is not the actual loss. We only calculated it because we said 120 plus 240. But this 240 carried an element, something, the 60 that is in this 240 is also the 60 inside here. That's it. Because we've taken 60 here, no need taking it 2 times. So we take it just once because that is the actual loss. So 300 will be carried to next year. So you see the 40, this 40 is our capital allowance here. And we've been carrying 70 last year. We bring it down here, add them together, it becomes 110. 110 is the capital allowance you carry to next year. So now let's look at your taxable total profit is nil because you have a loss or you have accessible loss. Yes. Now let's look at the next year. 2007 year of assessment. It will be on preceding year basis, ending on the company's choosing date. You see, preceding year basis 2006, so it will be January 1 to December 2006. Now let's look at January 1 to December 2006. This is it. We have a profit, yay! 140. 140 is our profit. That's beautiful. We have a profit, but we have loss from last year. So we are going to bring our loss from last year, which is 300. So when we look at our loss from last year and we try to net it off with our profit from this year, we'll make a net total accessible loss of 160. So we have a loss of 160. Now we'll bring our capital allowance for this year. Capital allowance for this year is 45,000. Now bring that of last year, we'll be carrying forward 110. Add them together is 155. We cannot do anything because we don't have a profit. So you carry it forward. Your taxable profit is nil because there is a loss here. Meanwhile, you're not going to pay company income tax, but you're going to pay education tax from this figure. You're going to pay education tax from this figure. Okay, now the next year, 2008. 2008, this is your basis period. By now, you must have known how to make a basis period. Accessible profit is going to give us this 260. Now we brought our 260 here. This is our 260. Our loss from last year, we brought it 160. Beautiful. Accessible profit available. Beautiful. Now let's look at it again. Look at our capital allowance for the year, 50,000. Now we brought 50,000. This one was what we've been carrying before, 115. Add them together, we have 205. 205. Now, when we want to relieve it, this company is not an agricultural or manufacturing company. So we do 2/3 of 100,000, which will give us 66,667. That is what we do here, because it's smaller than the capital allowance. When we minus, this is the capital allowance that will be carried to next year. This is when we minus this from this year. This is our taxable profit. So it is from here you are going to pay 30% of your tax. 30% of this will be your tax. Your education tax will be 2% of this, not 2% of this. 2% of this. Okay. Now remember, this is capital allowance carried forward. Okay. You now come to the last year. Accessible profit for 2009 is going to be this 400. Now there is no capital allowance for the year. They didn't give us capital allowance for the year, but we have capital allowance from last year brought forward to this year. When you add them up together, this is the total capital allowance claimable. So when you find 2/3 of 400, it will give you far higher than 138,333. Let's do it. 2 divided by 3 multiplied by 400,000. See, it's giving you 266,667, which is higher than 138,333. So you take the lower figure, put it down here, put it down here. That means you have cleared your capital allowance. No one is being carried forward to next year. That means this one minus from this, that means this will be your total profit. It is from here you're going to charge your tax. Then from here, you charge your education tax. I believe we get it clearly now. We understand this now. That means when you are having losses, your losses are to be carried forward. Now, the losses you are going to be carrying forward will not exceed the actual loss incurred. So as you are carrying them forward, be tracking it. All these losses you've been carrying forward, have they become greater than the actual loss? If they have, restrict it to the actual loss. That is how you do it. Now, whenever you have a profit, that is when you relieve your loss. When you have a loss, your capital allowance, whenever you have accessible profits, when you have cleared your loss first, then you now look at accessible profits to check with your capital allowance to see if the remaining accessible profit can take care of your capital allowance. If it can, take the one it take, bring the remaining one to the next year. You compare and all that until the business continues until you clear your capital allowance. But if the business continues and you get to the last point, your capital allowance is not cleared, you know what to do? Take it backward up to 5 years. You can clear it before the 5 years, who knows? You can clear in year 1 or year 2 backward. Who knows, you might clear everything at the 5th year. But if after the 5th year, you do not clear it, that uncleared one is lost. So look at two things that could be lost. In your year of cessation, if you have a loss on your year of cessation, that loss is lost. But capital allowance have hope because you can carry it backward. The only time your capital allowance is deemed lost is when you have taken it backward and you still cannot clear it after the 5th year. That is lost forever. I believe we understand these things we've just done. We've done capital allowance carried backward. We've done loss relief. These two topics go hand in hand. So it's good to understand them. So in our next class, we are going to be looking at taxation of perhaps personal income tax, employment, and maybe perhaps taxation of settlement, trusts, and estates. So come prepared for that interactive class. The class will start by 7. So you remember the method I told you to do when you are in a when you want to start the class, you know what to do so that you do not miss out on the instructions you are going to get in fine classes. So if you have any question, feel free to chat me up, send me a message, tell me the part that is not clear with you. I will explain again to you. Thank you so much for taking the time to come to class. I appreciate it so much. Do have a wonderful day and keep practicing until you become good. Thank you.